Hello, today is Monday, the 15th of December 2008, and this is Brian Shannon from alphatrends.net. I've got my computer issues worked out, it seems. Thank you for the suggestions as far as the spyware and malware removal programs and that sort of thing. The market today finished with a 52-cent loss on the NASDAQ 100, the Qs that is, or 1.75%. And this market it had a very quiet session. We saw a little bit of initial weakness, and then the market, stayed below that daily VWAP, rallied up to it, tested it again, and then it looked like it was going to fall apart here late in the day. That failed move lower led to a fast move higher, and we saw an increase in volume here as it did really give us one of the better opportunities for short-term trades here this afternoon. It came back down and closed right around that daily VWAP. Here on a 10-minute time frame, since we broke support last Thursday, we've seen the market, late Thursday. We saw Friday the market tried to rally back above this prior level right in here. About $29.80 really is the level. And we're seeing lower highs and lower lows. In that trend line is now coincident with that declining 5-day moving average. So we've still got to be very suspicious of this market. On the daily time frame, the market continues to be held captive below that declining 50-day moving average. And really, we've got the Federal Reserve tomorrow. We've got this uptrend line that I've been pointing out as well. Let's take a look at that. So intermediate term, this 2850 level is an important area. And if you actually remember back on the daily time frame, it was about $28.40, and that had been important before. And this low here is about 28.10. So I think really breaking below 28 is where we would see, I think, major damage done. But for now, there's nothing to suggest that that is happening. But we obviously have to be on high alert, basically, as this pattern of higher lows and higher highs looks as though it could be in jeopardy under $28.50, $28.40. So basically, we've got mixed messages from multiple time frames. We remain in a primary downtrend, so any rally is guilty till proven innocent, and it's only there as a tradable bounce only. Don't look for anything. Don't look to turn it into anything bigger than that until we have better evidence of the bottoming process. The oil has been just all over the place. We saw a huge volume last week. I guess that was probably Wednesday of last week, and we did get a bounce from that level, but it's been very, very choppy in here. I mean, these ranges are just huge, where we've got these $2 sell-off, $3 rally, another $2 sell-off, and then the gap higher and continuation run. Then a gap lower in here, move higher, a gap higher, and then just smash back down to this 5-day moving average. So huge volatility in oil. Volatility peaks at turning points. There's nothing here to suggest a bottom other than maybe some volatility. On a 1-minute time frame, we're below the daily VWAP pretty much all day, and this market is really, I think, too difficult probably to really pay much attention to down at these levels. So let's move on to the financials. The financials were down 50 cents or 4.1%. So since rallying up to past that that prior support level at 13, it had held there up till about last Thursday actually, and then it broke down below it. Now we remain below that level. So there's still no evidence of a bottom in the financials. It's guilty till proven innocent. We've got this declining 50-day moving average, and here on a 30-minute time frame, I was drawing in on some charts on the blog last week when I wasn't able to do videos. This most recent rally here, and obviously this trend line has been broken. It was broken over in here. We remain below that 5-day moving average, which is also declining. So no reason to think that this market's going to bounce, have any significant bounce here while that 5-day moving average continues to decline. We've retraced 50% of the move from the low that we saw right here on November 21st up to the high we'd seen right here on December 8th. So we came down to that level basically on the open this morning, or actually I'm sorry, that was the open on Thursday. We tested last Friday. We tested that level at 11.5. So it's just a little bit below this level in here. So 11.5 seems to be significant, maybe because of the 50% retracement, maybe because of the support, but it's a widely watched number right now, it seems. And this market, though, below a declining 5-day moving average, you got to be very careful. Don't be looking for that bottom yet. Wait for the evidence to show us here in terms of price. And right now, again, we remain below these levels, and that's pretty ominous for the rest of the market as well. Even though we're not breaking down yet, we do remain in a bear market, so you have to keep your alert very high. We're in a short-term trading environment only, that you can't look at it as an investing market. The Russell 2000 was down $1.51. This market also, kind of holding around these 10 and 20-day moving averages. And these moving averages, when they crisscross, represents indecision. And when there's indecision, you either sit out, you find a different market to trade, or you shrink it down to shorter-term time frames. And here, on the 1-minute time frame, we had, the market trying to hold up a little bit better than the rest of the market. Then it failed below that VWAP, tested it, and we had seen the same rally in here, except, the NASDAQ 100 was able to recapture that daily VWAP. Instead, in the Russell 2000, it acted as a level of resistance. So still, we're below the declining 5-day moving average here on the 10-minute and obviously the 30-minute time frame as well. We've broken this trend line last week. We've got this pattern of lower highs and lower lows, maybe a little bit of support near 44, but when the primary trend is still showing a declining 50-day moving average, you have to be very careful in here. Let me take care of that and ignore this. I'll just sit on it. Okay, let's see. Get back to the semiconductors next. The semiconductors were down 67 cents. And we'd seen that this group last week had held that $17 level, at least on a closing basis. We had a little shakeout below it on some bad news, and then a real strong rally. Actually, the bad news was here, then the strong rally. A retest last week as we broke down on a gap Thursday morning, and Friday it closed pretty strong in here. Today we're just pulling back. We remain, near this rising 5-day moving average. This market looks as though, it's probably, if we take a look at the hourly time frame, let's look in there at the Fibonacci from the election highs. We've seen that it's come up almost 2/3, retraced almost 2/3, and also met that selling right up here near the declining 50-day moving average. So perhaps this market needs to settle in a little bit further before it presents us with any good trading opportunity. S&P 500, also each day we're getting these lower highs during the day, but the market really isn't going down a whole lot. Friday, obviously, we had a turnaround in the market after the gap lower. Today, we're still below that declining 50-day moving average. We're still holding this little pattern short term of higher lows and higher highs. Again, this level here, I think, from last Friday is going to be important, near about $85 a share. This trend line is really broken. I mean, you can redraw it to try and look for support, but trend lines aren't really the best support. More horizontal levels are better to look at. And we've seen the resistance that this market, when it broke down last Thursday, it was below that support at about $88 a share, $88.50 a share. That level became resistance. We've got the declining 5-day moving average in here, so you've got to be very careful. There's just a lot of reasons to still be concerned about this market. A lot of people are bullish just because of seasonality, but there's still obviously a lot of headline risk out there with all kinds of economic numbers, hedge fund frauds, etc. So you've got to just remain nimble in this environment.